Given that very interesting period, we see right now we are very low in supply and high in demand. Are we already in a cycle? Over here, we're going to use En-Bloc as a denominator, and you will then be able to see why En-Bloc happens will create a replenishment, because by nature, En-Bloc happens by a private developer based on the market sentiment going and pay a premium as high as 30% to En-Bloc and receive 80% vote, right? So with that, we then see that premium translated to the next group of buyers, so on and so forth when they relaunch. So in this instance, on the left axis here, you see is property price indexes, as you learned just now. And on the right side, basically what you see is transaction volume in 5, 10, 15,000 denomination. And then at the bottom axis, what you see is the entire life cycle or lifespan of 15 years that we are using from 95 all the way to first quarter 2020. Of course, we're going to connect it to today's context as we move along. Okay. And at the top left, what we see is the self-inflicted cooling measures by the government. In fact, the very first one was as early as 96 for anti-speculation measures. And on the bottom, we see external shocks based on the macro environment. So over here, what we want to look at is the En-Bloc, which is the main denominator that I'm using here that create the next market high. So how many of you remember that 05, 07 is the very first En-Bloc cycle that happens? And this is the time where we had the so-called Delidan happens today, which is the former Farrakot, or even Gilman Heights, which is today's Interlace. Okay, so this is exactly what happens there. And then in 05 to 07, CapitaLand was very involved during this En-Bloc period. And then shortly after we hit that recession, again, the GFC, right, global financial crisis, and basically developers stopped En-Blocking, and at the same time they also delay their replenishment as well, because when it's a recession, everybody is very apprehensive about entering the market as well. So that recession basically recovered around fourth quarter 2009, and with that we saw developer replenishing the En-Bloc that was done in 05 all the way to 07, and that replenishment effect created the market to shoot up by 62 percentage point over 17 quarters from September 09 to all the way to June or July 2013. And that's where we have the 8 sets of cooling measures, right? And the 8 sets of cooling measures, the last one being the total debt servicing ratio. Slightly after, we were hit by the technical recession, and number of units unsold was around 40,000 units. Okay, so when it's technical recession in 2014, prices starts to slide down, and absorption rate was only at about 9,000 homes year on year. So you can see that back then, from 09 all the way to 12, 13, absorption rate were about 15, 16 or even 23,000 in 2012. But because of the cooling measures that prematurely bring the number of volume down, we see even so at 15,000 new home sales that was done in the 2013. Okay. So with that in mind, moving ahead, we saw total unsold unit to be left with 20,000 inventory in year 2016 September. And the next En-Bloc happened. So with that, we use 20,000 as a denominator for En-Bloc to restart if government continue not to release any more land, especially so in a recession. And this point in time, we saw the En-Bloc happens from 16 all the way to 19, and these are a very interesting period where all the HUDC has been En-Bloc, most of it, okay, to be today's so-called new homes. Okay, so what we have were this Tampines Court to be the treasure at Tampines, right? Or even we talk about in the Upper Serangoon area, we also have the Affinity, and formerly, if I remember, it's called Serangoonville or something like that along the line. So these were what happens from 16 all the way to 19. And through that period, we have a 1 year, 9 months or 7 quarters of En-Bloc cycle continuing happening. And shortly after, we have the replenishment that happens again. And this time round, the replenishment happens from 2018 all the way to first quarter 2020. And that replenishment brought the market up through a 10 quarters period by 12 decibel point. And we also have a cooling measure that was introduced in July 2018 as well. And this cooling measure basically lower your loan to value from 80% to 75%. And basically this is, of course, for those who are borrowing 60% loan, also drop to 55% as well. Okay, so you gotta fork out 5% more in down payment, so to speak. And we so-called hit the Ukraine-Russian war as well in 2022, okay, which is very sad for that two countries, of course for the world as well. But prior to that, we also had that COVID-19, which the whole world right now would deem it as endemic today. So in fourth quarter 2020, we have another en-bloc cycle that happened. In fact, if you saw the first two en-bloc that happened, they were mainly one in the CBD area, which is Maxwell House, and then of course in the core central region, we happen to have two. One is at Sophia Road, which is Sophia, today's been relaunched already, called Sophia Regency. And so the other one, which is at Surrey Point, which is today's Enchante or Enchanted. Okay, so those are two very small developments, but of course we talk about the bigger one that happens to share with you shortly later. Okay, but before we go into that, we talk about fourth quarter 2020. What we have 26,843 remaining inventory that created that en-bloc cycle to be happening. So instead of 20,000 inventory, right now we are using 26,000 remaining units as the inventory for en-bloc to happen. That's the new benchmark. And with that, we saw prices, okay, not just prices shooting up, first thing first, we also see that in this instance, another cooling measures that were introduced. So this time round, the government is much more proactive. Instead of waiting for the replenishment to take place, they intercepted in between when they saw en-bloc activity starts happening, because they realized from the last two cycles, when it comes to the replenishment, prices starts to shoot up. So before the fire even starts going bigger and bigger, government came in this time round and introduced a set of cooling measures, basically higher ABSD, okay, and lower loan to value and tighter TDSR as of December 2021. But this did not stop en-bloc from happening. In fact, Flame Park, which is at the Pasir Panjang precinct, was en-bloc by Hoi Hub for 371 million in 5th of October 2021. And replenishment starts to happen basically this year. So this development we are talking about, Flame Park, is the upcoming Terra Hills that will be relaunching very, very soon. In fact, in the next 2 weeks. And government introduced another set of cooling measures. If one is not enough, another one that just came in September 2022, which is just less than 4 months ago. And this is also lower LTV, increase in TDSR and MSR, especially so for private homeowners will need to wait out for the next 15 months if they were to downgrade to the HDB non-subsidized flat. So with that, we saw more en-blocs that happens in year 2022 compared to year 2021. A 3.5 billion were done in terms of en-bloc in the capital markets, comparing to 2021 at only 2.5 billion. Okay, so 12 deals against 11 deals, but the size is really huge. A 1.3 billion difference. Okay, and some analysts even says that there will be heightened en-bloc activities to continue in year 2023. However, a full-blown recession and government intervention may soon follow to slow down sales. Okay, so this is likely going to happen because that is exactly what we saw in the first cycle when 8 sets of cooling measures was introduced. Okay, and is that true? Let's look at what is the current remaining inventory. As a quick recap, we are right now left with 5,320 inventory unsold. Really low. Okay, and this is also due to the unexpected take-up rate during the COVID period, and developers were not willing to bid for land, or even government is not releasing any government land sales during that period of time. So given that very interesting period, we see right now we are very low in supply and high in demand. So okay, we see that over from 2020 first quarter, property price indexes were only at 148 points, and in 2022 Q4, over 11 quarters, we have grown up to 23%, 181 percentage point, which is really high. So it still continues to climb. So people who were waiting for price to drop, basically in this instance, we've seen them being priced out. And over here, we saw that in just 2023 January, we are just 31st of January right now, right? The end of January this year, we saw one en-bloc that's already happened at Bagnall Court, the Upper East Coast Route, sold to a consortium for 115.3 million. And that's already happening now in January. So will en-bloc cycle continue to go? As you can see over here, I believe it's going to continue. How many of you will think that en-bloc is going to stop or continue? So if you think it's going to stop, you type stop here. How many think it's going to continue? Type continue in the chat box. Okay, right, there's no right, no wrong, but of course with the all-time low inventory, okay, we are seeing that more developers are coming in, but of course we are seeing the en-bloc quantum to be within the 200 to 300 million range. Anything beyond that right now is quite hard for the developer to swallow, and many of them, their money is still stuck with the 2017 to 2015, 2017 so-called en-bloc, and also the replenishment, right? They are still stuck with the TOP period because with COVID and whatnot, and crunch in labor, so-called costs as well, and things like that. A lot of projects were being delayed in TOP. So with that, a lot of money is still stuck. So once those product TOP in the next 12 to 24 months, we see that developer will start going into the market to then replenish their land bank. So next thing, new launch are better and effectively, especially now. And why so? Okay, so first thing first, you learn about that masterclass or even the YouTube channel that I have here, touching on transaction volume equals price appreciation. And if you have not seen that, you can scan the QR code. This will lead you to that particular video on my channel in YouTube. Okay. For those of you who have already learned about this skill, basically we talk about the recent launch in January this year, which is the Sinica. At Tanah Merah Lake, we saw that prices to be done at an average of 2,072 PSF, okay? And 160 units were taken up, which is 60% of the development size. And with that, the number of checks collected, so what happens is that before you even go for new homes to buy a unit, right? The developer will ask for a check of interest, and this check of interest is what you will submit to entitle you for a balloting during the launch day. So what happened is there were 560 checks that were submitted for this balloting process, and out of which we have a good 60% take-up rate. Okay, so it is effectively 2 times subscribed because 560 checks, 260 over units. Over here by Channel News Asia, you also shared that some of the buyers who have held back from purchasing were due to the lack of suitable options previously targeted only at new launches. Okay, so we will see that this pent-up demand will continue to go, especially in the OCR area, especially in the Upper Bukit Timah area right now, right? Everything is going crazy, the cross island line and whatnot. So we are seeing much more so-called transaction and sentiment coming into the OCR precinct. So Huttons said that the supply of new homes will pick up in 2023. Okay, effectively we are seeing 10 to 12,000 units spread over 40 launches this year, comparing to 4,500 to 5,000 units in year 2022. Okay, which is only half the amount that's happening this year. So you learn the transaction volume equals price appreciation. This time around is going to be a lot more aggressive. So buying right is only 50% of the game. Okay, but what makes it 100% is exiting right. Okay, so a lot of people only focus about entry, but over here, remember from the main masterclass, we always talk about how to optimize your investment, right? And that optimization comes from exiting with the right exit strategy. So over here, we talk about the latest land sale, and this is the entire land sales by way of En-Bloc or even government land sales that will be relaunching hopefully in the next 12 to 24 months. So by way of En-Bloc, we have 26 of them. Okay, and by way of government land sales, we have around 12 of them. So what does this marker even mean? So if there's 26 by way of En-Bloc, we could then see that the premium paid for this site would have actually been translated when they replenish or relaunch it in the next 24 months or so. Okay, so when we have more lands by nature of En-Bloc, I would reckon that the market new denominator for PSF will be at a much more higher PSF rate. Okay, so especially so that when you know En-Bloc is happening right now. Okay, and 12 by government land sales. So government land sales, I wouldn't say that it is cheap either, because it is much more straightforward for a developer to just get it off from the government land sales program. And given the current low inventory, government land sales parcels are also very competitive. Okay. And over here, when we break it down into different regions, in orange we have core central region, light blue which is rest of central region, and dark blue which is outside central region. We can then right now quantify how many are in the core central region. In fact, there's only 8 of them in the core central region. And in the rest of central region, we have 17 of them. Okay, and in the outside central region, we have 13 of them. So how many of you from this data that I'm just sharing with you right now could already tell which region will enjoy high capital appreciation over the next 18 or even 24 or 36 months? Okay, how many of you can tell? Just type in the regions if you already know the answer. Which region given this data? Is it the CCR? Is it the RCR? Or is it the OCR? Okay, because you learn transaction volume equals what? Price appreciation, right? And if there's so much, or we also learned that the next launch will act as a catalyst to boost your price appreciation. So if the next launch is within your region and there's 17 of them there, you will know that which area will basically see that exponential catalyst to boost that PSF. Okay, so you may want to focus on this area, yes, for the RCR and also the OCR, especially so we are seeing 17 and 13. Okay, but of course there's also this very interesting asset class, which is the integrated development. Those are the one that is an outlier that brings up prices by as high as even 25%, all right, if we are side by side in the same area and launching at the same time. So those integrated development is something that you want to look out for as well, because those will set the tone for the PSF in time to come, all right. And we know that in OCR there's a few as well that is coming up in the next 12 months.